Okay, now we should be here. Hey guys, sorry the recording software had an update and seemingly reconnected everything. But yeah, nice, good to see you guys. Thanks for giving me a heads up on the microphone situation. Census says it's been actually very friendly for midwit trading the past month. Just buy support and sell resistance. Ideal for the crab. Yeah, as long as you know that you're trading crab, you're doing fine, right? I mean, that's why like it's been so important to me to promote the crab, because when you're trading like sideways movement, if you buy near support and sell near resistance, even if it goes up and then comes back down again, like you're doing better than almost everyone. Because like what most people are trying to do is buy the breakout here and then they get wrecked down here. So if you know that we're in a crab-ish market, yeah, you can take advantage of this kind of stuff. But if you don't, you're not gonna have much fun. So. Can we just nuke it? I mean, that's not. I mean, it could happen. It's just like this is still the crap. But we'll talk about it. Before we start, shout out to Blockfolio, the sponsor of the show. They have all the portfolio tracking that we used during 17 and 18. And some of you might have used them in 19 and 20. But yeah, they still have that, but they also allow you to trade on there with your mobile phone. So if you want to check that out, links are in the description. They've been amazing partners to work with, so just want to give them a shout out. Weak buying, gonna wick to 20k. We'll talk about it. Wick to 20k seems a little bit aggressive, but yeah. High time frame wise, right? Because we haven't done this in a while. Let's do this on a clean chart. There's one support area on the monthly that is interesting. That's 14k, right? Everything else is just whatever. That said, we never have to go back there again, right? We've had that in the past, and we can actually look at this. We've had breakouts of all-time high in the past. We've had like, in general, like strong breakouts on Bitcoin that never returned to like their origin, right? So expecting this to 100% go to 14k, I think is crazy, because I've seen that creep up more and more in the last few weeks. Like sentiment is getting quite bearish now, which is interesting to see because it was hilariously bullish at 65k. Now that we've had a bit of a pullback, kind of turns around, right? But yeah, we're still far from support. So this monthly chart isn't really helping us that much. If we go to 14k, then it's going to help us, because I mean, we're going to be buying 14k, right? If not, nothing to do here, right? The weekly time frame is a little bit more productive, but even that is kind of shitty, because that's what we've done essentially after the breakout of 12k is go up in a straight line, right? And if there's one thing that we've all learned in crypto, is that if you go up in a straight line, like there's a lot of pain to be had if this starts turning around, because then you usually go down in a straight line. And that's kind of what we've done here, right? Went up in a straight line, went down in a straight line, kind of looks shitty now. So yeah, I mean, it's just like that's just normal price action, I'd say. Like whenever you go straight down, you go straight up. Straight up doesn't have to mean this completely gets full reversed, right? But straight down, at least so far. In general, I don't want to be buying 32k anymore. I've bought this a couple times. I still remember being shit on for selling again, right? Like the first time I bought it, I sold into the lower 40ks, right? Pretty much nailed this one. And then it's just been sideways ever since, right? Like these two lines, right? The lowest and the lowest we've gone and the highest we've gone on the bounce have pretty much been the range that we've been trading in, right? So you would be saying, okay, where does this go next? And that's not really easy to answer. For me, whenever I see an impulse in one direction or the other, and then consolidation on the end of it, I expect trend continuation, right? So in this case, it makes more sense to me to expect trend continuation, which would be a move down. But it's crypto, right? So it could just go up instead. I think chances are higher that it breaks down than it goes up, but I mean, not by much, right? So, I mean, that gives us one kind of thing from the high time frames, is that we actually feel more, like in these kind of instances, right? You can feel more secure being out of the market because you know, okay, that at least the higher time frame trend is on my side. And then you can look for the lower time frames to kind of show you where the market wants to go. And then once you get like a confident picture, like let's say we actually go break down, come back up again, right? Then the high time frames would look like a shakeout, right? And the lower time frames would look good as well. And then you have like everything aligned to maybe do another leg up, right? But right now you have like the higher time frames telling you, okay, be a little bit careful. And then the lower time frames tell you nothing, because what's been going on is a range in here and then a range in here. So like that's neutral. And that means that if you want to be playing like the continuation trade, that's a little bit difficult to do, because every time you think this is going to break down, it's not going to, and it's going to get you wrecked, right? So that's kind of been the name of the game. For me, the reason why I don't want to be buying this anymore is because whenever you hit a support, it gets weaker, right? And it kind of feels like 6K did in the past, right? So right. So for me, like there's no trade in here anymore. I've bought support a couple times, not going to again. So either we break to the upside and then head higher, or we just break down and I'm going to be buying low. That's kind of my plan for this thing. I don't really see a good reason to get exposure while we're just essentially chopping and the high time frames look like shit. Okay. That's like the quick rundown. Any questions to that? Anything you guys want to be talking about with regards to Bitcoin? Oh yeah, to answer the question of Jason, who asked, are we going to wick to 20K? I think like if this breaks down, right, we have support down here in the 23K area. I think if we wicked down, I think that would be a massive area of support. So I'm pretty sure like you wouldn't be wicking to 20K. I think like 23K would be the wick. So if you're planning on buying wicks, I mean, that might be the one. I'm going to be looking for any kind of strong buying below this low, personally. Because at that point, everyone is going to be like, okay, this is going to zero. I think that's quite enough away. And the thing is, like, this doesn't have to be the bottom, right? Like, it can go back up again, go maybe even to 40K, and then do like a lower high. Go to like 14K on monthly support, and then go to 100 or whatever afterwards. But that's so far into the future, and I see a lot of people predicting like, okay, this is gonna go to 14K, or wow, this is going to 100K. And I think that's a little bit, it's not gonna help you much, right? Because if this goes to 100K, what it's gonna do first, it's gonna go to 40, maybe 42, and then probably go down again. And if you wanna like get into a swing position to 100K, sure, yeah. But you're gonna miss a whole lot of price action. And I think the same is true if you're targeting 14K. We could go there, yeah, but we're gonna bounce before that. Like, I'm almost certain. And then it's gonna reverse on you. Like, let's say you're shorting here with a target of 14K. I think you're gonna get stopped out even if this heads down. Because then like it heads down, it goes up, and then maybe it heads down low. And then you're kind of fucked, because you had targets too far away. So don't be too greedy. I think both on the up, like for the people that are expecting up and downside, right? If you're expecting upside, like selling into the 40Ks makes a lot of sense. If you're expecting downside and you're shorting, I mean, if you're not taking some off at 23K, I think you're mad. Why no stream on Monday this week by Cred? Because he's hosted Twitter Spaces, whatever, a thingy where he interviewed Sam. So I think that's gonna be something that he's gonna continue. He's been kind of like the repetition of streams has been kind of boring to him. So he's just gonna talk with people on Monday on his Twitter. If you want to be seeing that, I think it's excellent content. And during like job like this, there's not that much to talk about, right? Like I can tell you everything that you need to know in half an hour, and then we just chat. And I mean that's fine for me, but I get why he's getting bored by it, even more so when everything's going sideways. Sam? Yeah, Sam. He interviewed Sam on Monday. Was pretty good. I don't know, like if you didn't listen to it, I think he might offer a recording later, but not sure. What are your thoughts about that Wyckoff accumulation thing? I think like people look at this and they're like, oh, this is the Wyckoff distribution. And it's always easy to say in hindsight. And then they're like, okay, so the bottom has to be Wyckoff as well. And then they just laser focus on that. I think it's a pretty shitty way to look at stuff. Not like Wyckoff isn't, I think, like just that. Like you don't use Wyckoff and then you see like it working once and you're like, okay, this has to bottom the same way. It's not true. And even more so, like, guessing whether this is Wyckoff accumulation or distribution is something that I've seen many people do wrong. So it's like, I mean, I don't use it, and just because the Wyckoff stuff did kind of work up here doesn't mean it has to bottom the same way. So for me, it's not really relevant. I was bearish up here, saw the fake out, and I'm expecting this to bottom the same way. If you see something like this down here, I mean, buy it, I think. That's what I'm going to do anyway. Yeah, I can't find an archive of the interview. Yeah, it's live. A bunch of people were watching. There's usually not a recording. So if you want to see it, like, probably have to tune in live on Cred's Twitter. Okay. Are you playing the Bitcoin 4-hour wedge? No, I don't use wedges. I eat them. I don't use them. I don't even, like, you mean this thingy? Nah. Like, the thing with these, like, patterns or whatever is that, like, this is just down, like, this is down sloping move with lower highs and lower lows, right? So people are like, okay, now we've had like a bunch of lower highs and lower lows. I'm gonna play the mean reversal. And I mean, you can do that, and that's where the wedge is coming from, right? It's just, what you're basically buying is weakness, right? Like, why would I want to do that? Like, even if that was my, like, I've something I've never understood, right? I'd much rather buy something that slopes upwards, that is showing me that there's huge demand, than like something that is sloping downwards. And people are always like, okay, I see this price action like this, and it starts doing something like this, and then people are like, okay, I want to be buying this for the mean revert to like up here. Which, I mean, you can do, right? And sometimes it's gonna work. Most of the time it's not, but like sometimes it's gonna work. But like, this is just weakness, right? It's a mean reversal, yeah, but like in general, like the trend is down. What you're trying to do is fade the move, right? And it's not for me. I'm gonna be fading moves into support, right? I'm not gonna fade moves just because, and I feel like that would be this. Now, if you use this like wedges and any other kind of patterns, and you have success with it, don't listen to what I've just said, because I mean, you're having success. Doesn't really matter what I think about it. But for me, like, that makes no sense. I see weakness on the chart, and I want to be playing the mean reversal instead of, okay, this is something that's trending downwards, and I want to be playing the trend. It makes no sense to me. So, nope. And I barely trade the 4 hours these days. Like, the daily and the weekly are more than plenty for me. Even more so with such a clear defined range, right? Like, if you want to be making an argument for long, and there's a much better one than any kind of 4-hour pattern. It's that we're at daily support, right? And so far, that's held. And like we talked about back when this was happening, whenever you have a shakeout, right? Whenever you have like a support that gets tested a bunch of times, you don't want to be buying it anymore. It gets broken down and it comes back up again. Then it's support again, and it can bounce there a couple times again. And that's kind of what we're doing right now. So if you want to make like an argument for longing this thing, I mean, make that one. We're at daily support. So that's a fine play to make, I think. Now I'm not going to, because like I don't buy, like, more often than not, I don't buy like third tests, right? And this is like the 5th or the 6th or the 7th, depending on how you look at it. Like 1, 2, basically 3, 4, 5, 6, 7, 8, 9. It's not for me. Now, it could still bounce, right? It's just like at some point, everyone is kind of like looking at this thing, being like, okay, this has held so many times. I feel comfortable buying this with high leverage, and then they get wrecked, right? Or like, you don't even have to buy high leverage. They're like, okay, I'm just gonna buy a spot here and chill, maybe sell it into like the 35s. Again, like, that happens too many times, and at some point people get caught unaware, and then I'm stuck in a shitty position. So for me, that's not something I wanna be doing. But it's a fine trade. Like, I don't see a big issue with it. Have you seen a nuke turn into a lower crab, or do you nukes typically bounce hard every time? I mean, you can look at this. Like, you have the best example for that here, right? So we had crabby movement in here. Then we had a nuke in here. And what did we get after? A lower crab, right? So the range was this. Now the range is this. So you can kind of see exactly what you were talking about. Like, it happens. Like, you get a movement down, you get sideways, you go down, you get sideways. And then at some point, let's say, in general, what I tend to look for is you get a move downwards, sideways, and then another move down, sideways. And then the third move down is just tiny. And then you're like, okay, this is clearly like the impulses are getting less severe on the downside. And then I think there's a good mean reversal play to be had, right? But we haven't had that third down move yet. Not entirely sure if we're going to get it, but I mean, I think it's more likely to happen than not. So that's kind of that. Do you think Bitcoin going down is because the dollar index has been going up? I think Bitcoin's going down because less people are buying and more people are selling. If you like, the dollar index is up, and I mean, it's been, look at this. It's been down today. And then you look at Bitcoin, and it's red on the day right now. You see? So if you want to make like the argument that these are just inversely correlated, I mean, maybe a little bit, but it's not going to help you much trading this thing. Real good stuff, Doc. Thanks. Did the Italians ruin your sleep? No, it was actually much better than the games prior, for some weird reason. Playing daily and weekly is doable for small portfolios. I mean, yeah. if you're playing this range, right? Let's say you played it 3 times, from range low to range high, right? Unlevered, just with a small portfolio. You would have made 25. Let's say you even took, like, for some, like, God knows what reason, right? You even took both sides of the trade, right? You make 25% here, 20% down move follows. You get another 25% up move. You basically get another 25% down move. You get another 20% down move. You get what I'm saying, right? Like, all of this, like a range like this, if you're playing this and nailing it every time, and I mean, obviously, you know, you're not going to nail every trade, but let's say you saw this range coming pretty early and you traded it perfectly, you can double your portfolio trading that. And you don't have to be, like, if you're trying to make it in 1 day or 1 week or 1 month or maybe even 1 year, 90, 95, 99% of the time, you're just going to lose all your money. And what I see people do is, like, they're like, okay, I understand, like, that the high time frames are good, whatever, but I want to make money now. And those are the people that always go broke. And I mean, if you wanna basically go to the casino and bet it all on black, I mean, be my guest, right? That's basically what you're doing when you're trading the low time frames and high leverage. And it's probably, like, it's not the worst odds, because the reward, if you're completely right, are huge, and basically you just lose your capital every time if you're wrong. But that's not trading, and that's not how you should be looking at this. Like, the thing is, let's say you make it trading low time frames by being lucky, right? Because you're like, okay, I understand these high time frames, but I mean, I want to make money quick. You're going to make money quick, and everyone that does it is going to think that they're a genius, right? And then they're going to keep on doing it. And, like, almost always that just ends up in them losing even more, right? So even if you make it by trading shitty, that shitty trading is going to lead you to do a mistake and lose it, like, lose the stuff that you've made along the way, right? And then you're just going to be back to the start. So if you don't make your money by trading properly, you're just going to give it all back. And some people notice, okay, yeah, I've just been lucky, and then they cash out, but 99% don't, right? So, like, if you find a low time frame edge, abuse it. That's fine, right? But if you're just, like, basically gambling and you made it, don't kind of confuse that for proper trading, right? So if you're asking me, like, are high time frames something I should be looking at with a smaller portfolio? The thing is, like, even if you make it on the lower time frames with, like, smaller edge by just being lucky, you're gonna give it back because you're gonna think that's the way to make it, which it isn't most of the time. A bunch of people are good enough at this market to trade it on the lower time frames consistently. Most people that I see anyway, and I've seen a lot, just give their money back to the market. Like, they make money in the up only market or whatever, and then they just give it back. So a good way to look at it is, like, if you don't start out doing it properly, and I mean, you can trade properly on the lower time frames, don't get me wrong. It's just, like, most people gamble on the lower time frames because they're like, okay, I think this is the bottom, just gonna 50x or whatever. That's gonna, even if you're right, it's gonna lead to you losing it all. Now, if you're doing it properly, you're going at it and you kind of take it seriously from the get-go, even if you make less than maybe your friend that 50x and got lucky, in the long run, your balance is gonna look like this, while that guy's balance looked like this, and then it's going to look like this. Or maybe even this, and then it's just going to bleed down all the way back. So best thing you can do is just start properly from the get-go. It's like, and I mean, for some reason this isn't obvious to, like, traders, but, like, it's like the typical lottery problem, right? You get a person that has, like, $100 to their name, this is their wealth, and then they win the lottery, they're rich now, but they have no idea how to handle money because, I mean, that is still the same person, but suddenly they have a bunch of money. And what happens after, right? Everyone can tell. For some reason, no one can tell in trading what happens if you just, like, stumble upon money. Because what happens afterwards, 90% of the time it's just gonna spend it all or lose it all, and then gonna be back to square one. So make your money properly, or like expect to lose it. This is kind of my advice. So hope that makes sense. Okay. I've not been in the industry for so long, but crypto Twitter seems to say BlackRock is old news, like Apple accepting crypto. What's your view about this? With the Apple thing, I think you just like mistook a guy trolling for actual news. But isn't there an argument that low time frames is better for learning price action since it's faster paced? The thing is, yes and no. And we can talk about this for a bit, right? Let's say you're trading Litecoin because you for some reason like it a lot on the 1 hour time frame, right? And you're like, okay, I'm getting a bunch of signals, I can get much better, much faster, right? The problem with this is, and I mean it's the same for Bitcoin, it just happens less often. Let's say I come along and I bought this thing down here, right? I just bought it down here. Now you're saying, okay, this hit my support. This hit my support down here. So I'm going to be buying it, right? Which is all fine and good. It goes up in this instance, right? But what if I that bought this, I'm just like, okay, fuck it, this moved too slowly. And I bought this with big size, right? Fuck it, this is moving too slowly, I want to get out, right? What happens to price at this point? What you're going to see is this is going to wick all the way back down again and then go up. And then maybe even like complete your setup, whatever, right? It's just one guy selling, one random guy that maybe bought the bottom, or maybe one random bigger guy that bought and then just got wrecked on the way down, right? So what's technical analysis is gonna, like, nothing is gonna prepare you for that, right? You can have like the best charts, you can have the best indicators. Nothing is gonna prepare you for some random guy just being like, okay, I'm sick of this, I'm getting out. Nothing. And then you're going to be wrecked, right? The thing is, for that to happen on the daily or weekly time frame, that guy would have to be humongously big. And most of those people don't just like sell in one go and fuck you over. They just slowly start selling. And they mostly sell on the way up anyway, right? The thing is, like, the lower the time frame, the more random this stuff is going to be, right? You could be saying, okay, this went down because it hit like resistance on the 5 minute, but we all know that this could just be going down because one guy saw like Bitcoin go down and then just selling it or bought or whatever. Or maybe it's just like this rich guy from your neighborhood that bought Litecoin at $500 and is now sick of it. So there's a lot more noise in this than there's on the higher time frame. So you're gonna know earlier when you're wrong, but like most of the time that signal is gonna be noise that is gonna prove you wrong, and more often than not it's just gonna be random chance more than anything. The higher time frame you go, the less likely something like that is going to happen. But I mean, there's good points and bad points, right? Like I said, you're gonna get more practice in if you trade more. The problem is, like I said, random noise and random people just dumping on you can kind of ruin your trading experience. And you're sitting there on the 1 hour and you're wondering why it dumped, even though you had a really good bullish setup. And you're never going to be able to guess why it did, right? Because some random guys had sat there being like, okay, fuck this. So that's my answer to that point. Like, you're going to get a lot of false negatives on the lower time frames. So, yeah. Bitcoin on the lower time frames, nothing really interesting. Like I said, the more important thing is the daily support. Going to ETH BTC kind of had like a pretty nice thing going. retested support and then just broke down. We talked about this last week and I was like, yeah, I don't mind ETH, like the chart. It's just I can't buy it because no matter what happens, I think ETH's gonna struggle. Either it's gonna be worse than Bitcoin when Bitcoin goes down, or like in general, like if Bitcoin goes up crazily, ETH is gonna suffer. If Bitcoin goes down, ETH is gonna suffer. I don't want to be trading ETH right now, right? And we had like a decently bullish reclaim, led to a pretty nice move, but that got engulfed completely. So now it's like a bearish retest. But like I said, I'm not going to touch this because this is just gonna be even more choppy than Bitcoin is, I think. So there's not that much for me to do here. On the ETH USD front, it's retested the support for the third time, which you could be buying. This is support. I think it's still like a decent trade if you want to be taking that, like from here to up here. It's just this is the third test. I would have bought the first test if I had enough time. I didn't have, like I was focused on Bitcoin. I was thinking about the second test, but I don't like the situation ETH is right now for like the reasons I mentioned. Like if Bitcoin goes up, I don't think ETH's gonna perform as well or like as Bitcoin will. And if Bitcoin goes down, I think the same is the case. So I didn't want to buy it. And now it's the third test, still a decent setup, but for those reasons, I don't want to touch it. But yeah, it's at support right now. So if you're like only trading ETH, like I wouldn't want to be shorting into the support. That said, you can, like this is a very, very clear example of what I showed you on Bitcoin earlier. Like you can see what this is doing, right? It's bouncing weaker and weaker and weaker. And if that's not changing anytime soon, I think it's going to break down. On higher time frames, invalidations are more clear. Yes, and less chance, less randomness. Best time frame is the daily time frame. Is it really over? Or it's all really over, isn't it? Nah, I wouldn't call it that. Like every time Bitcoin goes down, people are like, okay, we fell for it this time. And every time it returns stronger, so no. It's just a question of how low does it go. And I mean, I'm going to be buying this thing expecting higher prices again at some point. It's just a question of when. And right now, like, do you see this? I don't like it. So I'm not buying. So, hey Duck, hey Tova, good to see you. So that's that. We talked about Bitcoin, we talked about ETH. The Bitcoin pairs on all of these altcoins, on the majors anyway, or the old majors, they're not really like, not even the biggest anymore. Look kind of crap. Litecoin, ADA looks meh at best. Bitcoin Cash looks really shitty. XRP looks shit. Like all of these not really interesting, right? There's some stuff in the DeFi space that is better. Something that I wanted to mention because it looks hilariously bad is Link. And we talked about this a few weeks ago at support basically down here and was like, I don't want to shit talk this while it's at support, but this looks hilariously bad. It bounced a little bit and now it's back at that support. And I'm back with saying the same thing. I wouldn't want to have this. And I mean, I'm fine with being wrong on this one because I have no position. But I think the most likely chance of, or like wherever this goes, I mean, this is much, much more likely than something like this. And then we start invalidating the uptrend, right? So like some of these altcoins look completely garbage. And it's funny because Link used to be the new gen and now it's the old gen. And now Link's starting to behave like the crappy old coins, right? And it's something that I talk about like quite a bit is that with these old coins, as long as you're new and shiny, you have like a lot of upside potential. The moment you start getting older, the chances of you going up, like, or your coin going up decrease and decrease. So I think in general in the next few years you don't want to be buying stuff that people actually hold. You want to be buying the new stuff. Maybe like the stuff that is launching right now that's basically looking like this, right? Maybe that's the place where you want to be looking for buys next, because then they can do like price explorations to the upside, while the older coins just do like a tiny bounce. Like they trend down forever, and then they do a tiny bounce and it start trending down again. So for me, like I'm not gonna be focusing on these older coins anymore. Makes more sense, I think, to look for the new shiny stuff that's gonna be replaced by something new and shiny again and again and again. It's kind of the curse of the old coins, right? You do something well, other people are gonna emulate it and probably do it better than you do, and then your coin just kind of is outdated tech. I'm not saying Link is, right? I'm just saying like people kind of assume it is, and that's all that matters, because if you're not buying this, or if like not enough people are buying this, the foundation dumping is more than enough to take it down. Don't diss my Link, sir. I mean, if you like Link, be my guest, right? I'm just saying, like, I don't think it's gonna outperform Bitcoin at least. Might outperform the dollar if Bitcoin goes up. I just don't think right now is a good place, even though it's at support, to be looking for like any strong trades there. Then again, like saying this, I hate when coins are at this kind of point in their cycle, because where else are you going to buy it than here, right? Like, because the thing is, if you want to be buying this when it turns bullish, it would have to be like all the way up here. That's like a 2x away, and it's pretty shitty. I think that's probably the best place to look at a buy. It's just a problem of you're gonna miss like 50%. The thing is, like, this goes down, it goes like another 50% against Bitcoin, right? And then the risk reward kind of skewed, and it's kind of a shitty place in general, because I think more often than not it's just gonna break down. But yeah, if you're a Link lover and you only want to have Link, I mean, you can buy the support and pray to God that it's not gonna break, because if it's gonna break, you're gonna be in deep trouble, and I think the chances of it breaking is higher than it holding. You think Link will be the next XRP or Litecoin? Yeah, I think so. I'd be very surprised if it didn't play out like similar. Which is to say, like, you can compare these, right? You can compare these, and XRP and Litecoin, they all had like another bubble in it. So that Link could bleed out, right? Bleed out from here and then go back up again. But like in the long run, the older a coin gets, the more likely it's going to be outperformed by Bitcoin. And this is even true for ETH, right? If you look at it in the last few years. Now this can change. ETH might be the one that breaks the curse. But like if you look at it, like this was the high, this was the high, this is the recent high, right? Against Bitcoin. Against Bitcoin, most stuff makes lower highs on a long enough time frame. So gotta be selling those altcoins when they pump, because yeah, most of the time they're just gonna underperform Bitcoin after a few years. But then again, like something that people miss on the altcoin front, and why altcoins are such a great trade, right? Let's say this is Bitcoin parity, it's an altcoin Bitcoin chart, right? So you have this is where Bitcoin is the Bitcoin market cap, right? And what you have with altcoins, what they always do, they start out, maybe they start out dumping even, right? Doesn't really matter. Like, it could even be like this. They start out dumping, and then they approach the Bitcoin market cap. And I mean, during this time, you're gonna outperform Bitcoin massively, right? This is where you wanna be in those altcoins. But the moment they start getting big, you wanna be like shedding your bags and getting the fuck out, because as far as like history is concerned, the closer you get to Bitcoin's price, the higher the fall. And so far, nothing's overtaking it, right? So you want to be looking for opportunities where you think like, okay, this has like some promise, and then the higher it goes, the more risky it gets to hold. And that's just been how it is. So, I mean, it's a good way to look at it. And you're going to make a bunch more than if you're just sitting in Bitcoin while like the crazy part of the altcoins are going on. But the moment it starts getting too close, you want to be getting the fuck out. In my opinion anyway. And if you disagree, disagree. I don't really care. Don, have you and Cred ever met in person? Yeah, a couple times. Not as often as I'd like to, but a couple times. So, okay. Enough of that. Sorry for the rant. Any other questions? I was lucky, guys. I sold everything on April 17 in a panic. Being a noob, I had no idea what any of these things are valued at, and panic sold back to fiat. Well, April 17th. Okay, let's see. I mean, that's a pretty good sell. I'm now following Duck and Cred like a holy religion to see where to get back in. Don't, man. The best way to look at this, right? If you want to be in, you establish a position. If you have no idea what you're doing, right? You establish a position and you DCA in. If you don't want to be in, don't be in, right? But like in general, saying, okay, I'm reliant on this guy and that guy is the worst thing to be. Like in that position, no one wants to be in that position. Or for some reason, like a lot of my followers want to be in that position, but like I don't get it. Like you can take my opinions and kind of make them, like you can take my teachings or whatever to kind of understand the market better, but you're gonna be the one that pushes the button, right? Let's say I disappear on like a trip to whatever country next week and I'm not gonna be around. If you can't move in the market, I mean, might as well not be in the market, right? So only ever use the stuff that I talk about as like something to guide you or help you like learn how this market works, and not, okay, this guy is going to tell me when to buy or when to sell, because in general, that's just not going to end well. Because who the fuck knows what the future brings, right? And I can't tell the future. Just because I have a bunch of experience in this market doesn't mean I'm going to nail everything. So if you're bullish on crypto in general, you want to be having a position. And if you're not. And if you're just trading this and you're taking your trades off of like other people, then take the money, get the fuck out, and consider yourself lucky that you didn't lose it all. Because like you don't know where I'm invalidated, you don't know where I'm gonna get in or out. Sometimes I tell people, I mean, I told people where to buy like on the first nuke, and I told people when to sell, but like sometimes I don't, and then you're gonna be screwed. So yeah, blindly copy trading isn't something that anyone should be doing. Can you show an example of how to buy a nuke like 24k Bitcoin? Do you set bids, and if it bounces, do you market buy? I always seem to miss out a little bit. I mean, the thing is, you don't know where it's gonna stop. It's just you draw your lines, you kind of look at the market, you see, is it accelerating still? Like, look at this on the lower time frames. This is the only real consistent times where I use the low time frames is during nukes like that, right? So that's, well, I hate. Can this even, well, we'll go to like 30 minutes. On the 5 minute, pretty obvious. Oh, whoops. Whoa, this is going much easier than I thought it would. Okay, so here, we're in the nuke right now, right? So we topped somewhere up here, right? And then we're nuking down. Something that you see a lot in these kind of instances when like the bears have the bulls by the balls is a constant bleed out, right? And then you don't want to be buying during that bleed out, right? You don't want to be like, when you see, okay, people are in danger, and in this case they were, You don't want to be buying during this. You want to be buying the sharp spikes, right? So it starts spiking to the downside in here, but you want to be buying like the sharp spikes down. And if you kind of looked at that and you're like, okay, it's starting to spike down here, like that's the earliest during the nuke that I would even consider it, because this is still all bleed, right? This is all bleed, and then you wait for kind of them all to get liquidated, right? And in this case, you didn't really have too much of a move, right? It looks big. It's a relatively big move, but it's still relatively tiny. And if you look back, where was that? That was right like somewhere in the middle here, nowhere near support, right? So you want to be buying near support, and you want to see that capitulation come in. And the easiest place to kind of have both was in the 30K area, right? Cred nailed the bottom, like he bought way lower. For me, like this was the area to buy, and I did. And then it spiked lower and went up, which is nice because then I got filled pretty much entirely. So you see the spike and the high time frame support be hit, and then you just buy and pray. And I mean, sometimes it goes lower, sometimes it just completely nukes through and then you get wrecked. But in general, like those are the only two things that you really need. A spike into support, like liquidations coming in, and then you just buy as low as you can. And sometimes you nail the bottom, sometimes you just buy a little bit higher. But usually what happens is, let's say you bought here, it reverses at least to somewhere like there that you can sell. And if you bought the bottom, you sell the top. I mean, that's a pretty nice trade after the liquidations. But if you buy before the liquidations, it's just going to be part of the liquidation cascade. But yeah, you just kind of have to figure out like who has who by the balls, who's under stress, and who's going to kind of capitulate and how much can be capitulated, and judge from there, right? In this case, there wasn't really a news like, okay, Bitcoin is banned by the US or something, because if that happened and you get like a nuke, sometimes you don't want to be buying the supports, right? But if you see like there's no real reason other than leverage in the system, you can buy it at support more often than not. So yeah, imagine if we just started ripping to 100K. I mean, that'd be pretty nice. I'd be buying here, probably selling higher and then just buying higher again. But yeah. So yeah, that's that. But I mean, it would have to be, with these situations, it's highly individual. Like every single situation is a little bit different. So I mean, like a blanket rule, okay, you buy these nukes by doing this and this and this, doesn't really help you much. You just look where's support, where's this capitulating to, and then you do that like 10, 15, 20 times, and at some point you're gonna get a good feel for it. And that's kind of what I've been doing over the years. But we trust you because we know that you understand everything better than we do. If it's wrong, I don't care. If I did everything on my own, I lost everything already. Yeah, but in general, like if you rely on someone else, right? You're not really like, I mean, yeah, you might make money for a few years, but at some point, that's just not sustainable anymore, in my opinion anyway. Like you gotta put in the work yourself, because if you're relying on everyone else all the time, yeah, it's not going to do you any good. But then again, if you don't really care about this market and you're in it and you copy trade a bunch of people that are doing well, and you pull out money out of the market from time to time, be my guest. The problem arises when people don't, and this is something that like frustrates me like to no end. People don't listen to me when like I'm saying, okay, we're in like this is resistance, be a little bit careful, and then it nukes, and they're like, okay, this guy was right, I was wrong, so now I'm gonna listen to him and start selling down here. And this is something that happens all the time, right? People are like, okay, this guy was bearish here, he's still bearish in here, So I'm going to be bearish too. And then it goes down and then reverses back up and they start freaking the fuck out, start buying and start getting angry. Like that stuff frustrates me so much because, yeah, no one's really learning anything, right, from mistakes if you just copy it. And I don't know, whatever. I don't want to start ranting. It's just like Twitter sometimes and like in general social media can be frustrating. Don, when would you buy altcoins? When Bitcoin's out of danger, right? Buying altcoins in here was pretty decent. Even during this like up move, buying altcoins was pretty decent. Funny thing is like most of the altcoin gains were at the top again. Something that you can generally watch out for whenever you see crypto top or like Bitcoin top, cryptos usually like Bitcoin goes like this, starts topping or like even starts topping like this. And during that time, the altcoins are going to go like wild every single time. Just the flavor of the month is going to go wild during the highest and during when the top's already in, basically. So given that right now we're dropping, I'm not interested in buying the altcoins too much. You can play them from support to resistance, but the best time to play the altcoins again is going to be when we top again, which is going to be like, let's say this reverses here and then tops like in the 130k area. That's when you want to be buying altcoins for the short-term trade, not during like the nuke down or whatever. Because during moves down, like even more so when Bitcoin moves aggressively, if you're exposed to altcoins, you're not going to have much fun. So given I expect a move down, I'm not going to be buying altcoins. It's just like buying leveraged Bitcoin, basically. Look at Doge, Don, it's going to zero. Yeah. I mean, anyone that thinks anything else is just like delusional. This is just fucked. And the funny thing is, right, like, I tweeted down here, I was like, this is fucked, but it's going to bounce and people are going to say Dogecoin is back, baby. And that's literally what happened like 3 days after. Like this mega mooned and now it's retraced the entire thing again. And then maybe it bounces again and people are like, oh yeah, Dogecoin back. And then it's going to break down again. And then like for a proper double bubble, whatever you want to call it, look at 200 sats. Like if you want to play Dogecoin seriously, look at 200 sats, prepare yourself to buy it and then sell maybe at like 600 or 800. Because what this is going to do is it's going to like probably bounce like that, start bleeding down again, maybe rally and then like obviously, actually, I was about to say like obviously in a longer, like not as long time scale, but this is actually quite realistic. And then go back down again, and at some point you're gonna see it at 100 and lower again. I think it's just gonna take a while, and I think the top's in, and it's not gonna go higher than this again. Probably ever against Bitcoin. I don't think against Bitcoin it's gonna go back to 1.3k sats. That's just nope. Don, we're still waiting for 15 sats and again front run you if it goes there. I'm not going to be buying Doge again for a cycle play. I think there's better plays and I think Doge is forever tainted. This is like, I'm not going to be buying Doge. If anything, I'm going to be buying Doge 200 for the bounce and then never touch it again. But you're not going to see me play Doge again. How do you set your order block levels? I set them. I've explained this before, but like in general, how I started out is I basically had like strict rules for it, and now I don't anymore. So there's no real easy answer for it. I just use the ones that make most sense. Most of the times, the ones that make most sense are at swing points. In here, for example, this one made a lot of sense. You have resistance, like this is the swing point. You have resistance, resistance, resistance. It breaks out and then breaks down again. And then you have your resistance test in here. And most of the time I look at those, and at the lower, like at the swing points at the highs and the swing points at the lows. But there's no real clear rule to it. I just use the ones that make most sense to me, as in the ones that I think are most important, right? This one is clearly important because this was the Coinbase breakout, so you can tell that there's going to be a lot of interest in that area, right? And then this one, for me at least, was most important because you've had your rally and your first real pullback in the rally originate from here, right? Like this was the rally, first pullback in that, and then you broke that to the downside. And where you're gonna find resistance again, if you're gonna find resistance anywhere, probably there, right? So yeah, that's why like that was interesting to me. And there's a bunch more. We don't really have enough time to talk about it. I might make a video on it because I get that question a lot when people are confused why sometimes I use some point and sometimes I use another. I think it just depends on what the market did, right? For example, this one is clearly most important because of the Coinbase thing. And then you can just kind of look at the market, see, okay, which levels are most important. The reason why I use this one, for example, the lower one, is because that's where Tesla bought, right? Like this area is where Tesla bought in, like, we don't really have it super public, but like that's roughly where Tesla bought, right? So you know that that's going to be an interesting area because everyone that kind of is trying to copy trade Tesla, they're going to do it at the same level that they bought. And people are like, okay, Tesla's going to be underwater. They're going to look at that level. So you have a bunch of confluence there. So it's not only, okay, this is the lowest point, it's the highest point, but a bunch more. You cut out there for a while? Oh, I hope I didn't. I don't have, like I have 0 drop frames on my end, so I'd be surprised. Maybe it wasn't your end. Great analysis done. I have a question. Do you use TA programs to help you in your trading analysis? Not really, no. Most of the stuff is just basic reason, right? Like it was obvious that Coinbase, for example, and I hate using this all over like every time, but it's like the same story as we've had in 17, right? It was obvious that this was going to be an inflection point because Coinbase gets listed. People have been waiting for that for the longest time. And then you want to be seeing, okay, how important, like, how are people going to respond to that? Are they going to rush in and try to get exposure to crypto, or are they not? And they didn't. So this is an important area, right? And that's just logic. You don't really have to use anything else. You don't, I think if you like trade purely logical, you don't really need much more than just like a straight line on the chart, like one line. And you're like, okay, this was a breakout. This was Coinbase news. Do we hold it? Do we not? And then if you get the same thing, right? Let's say we get another FUD attack and it moves down. And then you're like, okay, this was the breakdown. This is the FUD news. Are we going back up or not? And if we do, fucking moon it. You don't need much more than that one line in that instance because you're like, okay, this is super scary. Something bad happened, like whatever, China does something again, or even the US or whatever. And then you see strength into that and then you can just trade that. You don't need like fancy indicators. You don't need any of that sort. You just need to kind of be able to kind of use your head in those instances when it looks really, really bad or really, really good. So for me, it's not really helping me. It's just like you see a bunch of signals from like a bunch of indicators or a bunch of trading suits or whatever. And it's going to confuse you more than it's going to help you most of the time, in my opinion anyway. Like for me, I'm not like the giga brain that can look at 50 data feeds and just like see the holes in the matrix. It's just not for me, right? For me, it's much more easy to say, okay, good news, into a breakout, got faded. I mean, that's pretty bad news. And or bad news down here, faded into a breakout. That's good. Like, doesn't have to go much deeper than that. And then everything else is just me trading along the way, right? There is no logic in the market. I disagree heavily. There's a bunch of logic in here. Like, this is the most logical drop that we've had in ages. If you don't agree, I mean, I think you shouldn't be trading this. Like, this makes a lot of sense. And then the same thing that we've had in here, like these kind of tops, they make a lot of sense to me anyway. Now, the noise in between, maybe, yeah. Like when you have like this foot down here, like whenever you get people liquidated in one direction, the market makes a lot of sense in those points. Whenever you have like the market go up and then start squeezing, like the market makes most sense during those squeezes because you just have a bunch of people that get fucked. And the same thing to the downside, right? You could be saying, okay, this shouldn't be going so low because this should be worth more. That's a completely different discussion. But if you're saying, okay, like you shouldn't top like this because of Coinbase news or whatever, I think that makes no sense. Like this price action after the announcement was highly logical, and I think the same thing can be said like about this. Now, whether you say, okay, this was logical or not, like this entire up move, I don't want to discuss that because who the fuck knows, right? I can't make that judgment. But whenever you have like these inflection points, I think they make a lot of sense, almost always. And I mean, same with the COVID crash, right? A bunch of people basically got wrecked by trying to play the doomer trade. The world is going to zero, right? And I mean, that was the easy trade to take at that point. Like everyone was kind of on the same page. We're fucked, basically. But if you weren't panicking, I mean, I bought the crash down and then sold way too early. So I was one of the people that didn't think about like, okay, does this even make sense or not? So I don't nail it every time, but like in these instances, like at the highs for me anyways, makes a lot of sense how these markets trade. So what would be the next move? Totally logical. I mean, like I said, you get FUD, you get anything bad while this is breaking down, and then you actually reverse that. Like, let's say this would be the most logical move to me. You break down, you chill below the low, and then you start breaking up again. Then I think the most logical move afterwards would be a move up. The same thing could be said if we move up here, but then again, like that's less certain, I think, because we could still be in the crab at that point. But if we break the crab range and then don't have follow through, I think the most logical move would be to the upside. Anything else wouldn't make any sense. You get a breakdown here and you go sideways in here again, down below 28K. I think there's much more chance for it to go up than down, because at that point, you'll have too many people on one side of the trade and the sentiment is going to be terribly bad, and there's not going to be a good reason to go much lower in the short term anyway. Or we just do this, and then I think the most logical play is to the upside as well. Less more logical, like less more certain, but I mean it's still relatively the same. So do with that whatever you want to. Like those are the kind of trades that I want to be looking for. This one up here and down here maybe somewhere, or if we show strength, like those kind of things that make sense to me. Everything on like in between is just like playing simple TA, right? Like me buying this range a bunch of times and selling it again is just simple TA when everything is out of whack, right? Because whenever the market crashes or rallies, it becomes out of whack, right? The market is inefficient and people are completely caught unaware, right? They're like, what the fuck, where do we go now? And after those kind of moves, what usually happens is the simplest TA does work again, right? So you have a massive liquidation event, and then you get a bounce, and then more often than not, the range that forms is going to be like the range to trade in for a while. So you can literally buy support resistance, right? When you start breaking out massively and you have like massive tailwind, the simplest TA plays out in a different way, where it's just always going to be like you buy every breakout and you make money, right? It's a little bit more difficult for me to trade because I mean it's just up only, and I'm not really like the best guy to just leverage into that. I like to chill in spot when it happens, but this is like when you have like an up only market, the logical play is just to long every breakout. When you have a sideways market, the logical play is just to play the range over and over. And then when you have a bear market, you want to be selling resistance and then waiting to buy like very, very low. Now, the difficult part is like kind of finding out what market we are in, right? Because everyone knows that you shouldn't be longing in a bear market, and everyone knows that you should be long in a bull market. Generally speaking, when you have massive moves on the downside, what happens is you enter a sideways market afterwards. Like that's always, like almost always the case. Look at this. You get a massive move to the downside, you move sideways afterwards. Like you get a massive move to the downside, you move sideways after this. That's why like this was so easy for me to say like this is gonna crab. Like I said that months and months ago, because like we've had a massive move to the downside, and almost always you get sideways movement afterwards. And now for me, I think we're kind of like in a sideways down market. So I'm going to act accordingly. That's why I'm not buying support, right? And that's why I'm not trusting every breakout. But I could be wrong on that front. For me, the high conviction plays are usually into like massive moves. So buying when it breaks down, kind of thing. I don't know if that made any sense to you guys. It makes sense in my head, and that's kind of how I trade in general. So I hope it kind of does for you too. I don't know. So yeah, remember to click the like button, everyone. Thanks, Enzo. I would have forgot to ask for it. But downwards wedge is bullish breakout signal. I don't use wedges and that kind of stuff. So if you want to say this is a wedge and it's gonna break up because of it, sure, be my guest. And I mean, I could see this break up and then break down. But for me, like, is that wedge really important, or is it just a range play in between here? And for me, it's just a range play. So whatever floats your boat, right? If you have this as a wedge and you're like, okay, this is gonna break to the upside because of it, be my guest. It's just not something I really care about. Okay, so that's that. I think we've talked enough. I'm super exhausted. I've been taking golf lessons pretty much all day, every day, because I'm playing in a tournament, and I never played golf before, like before last week, basically. So I've been preparing for the tournament, which is at the end of this month. It's gonna be a fucking nightmare. I'm gonna embarrass myself so bad. But that's why like I've been taking golfing lessons with Golf Pro, and getting better, but still super exhausted. So not gonna drag this out any further. But yeah, appreciate you guys coming by. We'll discuss this. I think on Friday, it's going to be a casual Friday. So it's going to be on this channel. So if you want to come by, chat with Cred, and we're probably going to bring a guest to just hang out with. Not entirely sure, but it's definitely going to be Cred and me. So if you're interested in that, come by Friday. Before I end the show, I want to thank today's sponsor again, which is Blockfolio, as always. They allow you to trade on your mobile phone on their platform, which is pretty neat. Like if you want to do anything on your mobile phone trading wise, I think that's probably the best place to be, because usually I don't trust the mobile stuff too much, but with Blockfolio I don't have such such fears, or not as much anyway. So yeah, if you want to check them out, their links are in the description. And yeah, I appreciate you guys coming by. See you on Friday. Bye bye.